Well, it's been a great run. The issue is where retail is now in relation to where it's been. So here's a great ETF. I try to look at it every day. I would say it's a good thing for everyone to do, and here's why. It's equal weighted, and you see here it's 89 stocks. Now, consider this, 2.2 trillion and almost 10% of the S&P. But the best part is, right, it's a smattering of names. I mean, Target, Amazon's in there, for instance. Tiffany, very specific business. Ralph Lauren, Best Buy. And the names go on and on and on. Macy's, Foot Locker. You can see them here. Here are their logos. So it's an equal weight ETF for the most part, and it captures such a broad swath from Kroger, Costco, and so forth. And here is the chart. To my eye, what we've had is obviously an impressive rally. But that rally, if you were to look at it, leaves us back at a former top. And one of the things about this kind of thing is that you often, after reaching a former high, you contend with it. Ultimately, you can break out, but in the first approach of a past high, before exceeding the high, you contend with it, which is either back and fill or back away. So if we were to put in the trend line, which is what this effectively is, and you were to make the bet that that trend line were to go like that, what essentially I'm betting is that this double top takes us back to trend. It's no big deal, but you don't set up for a breakout in principle when you first approach the former high. Let's move on. So two stocks, one I like, one I don't like. We'll see how they go. They both have numbers coming up. To my eye, this setup is the following: well-defined tops at a common level, higher lows, and working into the prospective breakout juncture. JWN on the long side. By contradistinction, look at this. Not at 52-week highs, and if I were to put in the lines, all it is a rally back to the top from which it has failed, 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 and I'm going to make the bet again that it's going to fail. So Children's Place, PLCE, on the short side.
Carter comes over.
Oh, he comes over. I feel like there's a lot in there. We got to dig into.
Strong. Always before earnings dangerous, but you know that's how it works. It doesn't work.
Thanks, Michelle, for bringing the chair in. Okay, Carter, so I'm curious, does retail correlate to other sectors, maybe like home builders or other discretionary?
Well, so there's retail, and then talk about that. Like we were hearing in the preview before, that it's the second best performing sector, right, up 14.5% consumer discretion. But the equal weight sector is only up 4.5%. That's a big spread, 4.5%.
That's Amazon driven, or?
Amazon, Netflix, and some of the other huge components, which is weighted versus the XRT, which is equal weighted. That's kind of the point of that particular ETF. It gives you a broad swath without the skewing associated with Amazon and some of the big moves. Retail in general has been great, but it's not any better than the market if you look under the hood.
Right. Karen, do you have a question? Because you have been or played in Children's Place.
Yes, I have.
Points in time.
I have in the past, but I haven't now. So you have department stores.
Yeah, Macy's.
Macy's, right. Do you look at them as sort of a monolith, or do you differentiate between?
Well, I mean, certainly Macy's is right now better than JCPenney.
Right, but let's say Nordstrom's, Dillard's, Macy's.
I mean, in principle, the idea is to try to get it right fundamentally, or technically one stock at a time, and then make inferences about groups, about retail or apparel, or about the sector overall. But just as a good fundamental analyst does bottoms-up work, it's the same with the chartist. Start with one chart, then another chart, and then try to see what the story tells.
Hey, Carter, you mentioned that you like Nordstrom. When I look at all these charts, they almost all look the same, right? Double tops or some kind of tops.
Different than Children's Place, no?
Well, different than Children's Place, but I'm curious why Nordstrom's. Let's take out, is it Nordstrom's versus Children's Place, or why Nordstrom's in the retail? Why did you like that one?
So I just wanted to focus on stocks that have earnings this coming week.
Okay.
But second, again, the principle is before you can exceed a high, you back and fill. It makes sense. When you get there, it's like doing your last chin-up. You have to do work there. Nordstrom's has been consolidating well at the 52-week high versus the XRT, which has made a quick stretch to the high.
Yeah, I mean, I like the brick. I mean, the brick and mortars have had such an incredible move. I mean, you look at Macy's due to report. I think, gun to head, everybody thinks this quarter is going to be a very strong quarter. I think it probably will be. But like you said, is it enough to carry it through? When you separate out those brick and mortar players from sort of the traditional brands,
right,
do the brands look stronger? And I think that may be a little bit to Karen's point.
I mean, some, but it's case by case. But I would also say this. I mean, just the clients that cover this fundamentally that are either beta neutral, dollar neutral at the hedge fund level or just long only. almost a consensus view coming back is that comps are going to be pretty hard in Q3, and the word impossible has been used for Q4.